Commercial real estate videos are brought to you by Bull Realty. When your business requires proven performance, contact Bull Realty. And by Arnold Golden Gregory, France Media Inc., Resnick Group, and Andy's Army. Welcome to America's Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with and laugh. I think we have to have some fun along the way. Well, I'm Michael Bull, your host to the world of commercial real estate. Thanks for joining us. If you have any questions or comments related to this show or about any commercial real estate related issues, we do appreciate hearing from you. Our phone number is 888-612-SHOW. Our email is info@creshow.com. You can also connect with us through Twitter, LinkedIn, or Carrier Pigeon. Yes, you can find them all at the show website, commercialrealestateshow.com. Well, you won't find the pigeon at the site. Just put some commercial real estate nuggets, on your windowsill or something. Our show pigeon will come by and see you. Well, today we're going to explore the U.S. housing industry. The housing market and new home construction has historically been a catalyst to bring the nation out of past recessions. We could really use the jobs and the spending from a healthier housing industry. So today we'll look at the current state of the industry, where it's headed, and what that means for you. Please welcome my first guest, Brad Hunter. Brad is Chief Economist and National Director of Consulting with Metrostudy. Metrostudy is the country's leading provider of primary and secondary market information to the housing and related industries. Your best possible partner when it comes to making decisions about buying housing or development nationwide. Brad Hunter, thanks for joining us today.
It's a pleasure to be on the show with you.
Well, thank you. Appreciate you calling us from New York today. And to get us started, tell us about the markets that you cover and how you obtain your data.
Well, we drive every street of every subdivision within 84 MSAs around the country. And we're looking for curtains in the windows and welcome mats, counting starts and lots. And so what we're seeing now is there's a 20% increase versus a year ago in the number of single-family housing starts from the builders.
Wow. And how does that compare to past years, to put it in perspective?
Well, in past years, starts were flat to slightly up, based on 2 years ago. Going back 3 or 4 years, starts were still going down. So we've just passed the bottom in the last couple of years for housing starts. And what's driving that is end-user absorption is up. When you look at how many people are moving into homes and, like I said, counting the window trends being put in and welcome mats and all of that, we can see that absorption is up 12.4% versus a year ago. So that's a good sign. It means people are feeling more confident. People are getting past the problems with financing, and even the people that had short sales 3 years ago are able to get FHA loans again.
Right, and these buyers are ones that can actually afford to put curtains in the windows, maybe.
I mean, what we're doing there is, of course, just trying to see which homes are getting occupied and which ones are still finished and vacant. The see-through houses, as we call them, are still evident in the markets that are having problems. So in certain far-flung counties of the Atlanta market, Pinal County out in Arizona, places like that are still struggling. You still have a lot of homes that have been built that never had any curtains in the windows, and they're welcome mat. Nobody's living in that house.
Well, what is the current supply of homes right now that are available?
Well, the finished vacant numbers are down by 2/3 from the peak, and that's the good news. We used to have quite a huge surplus of built and unoccupied homes, and that was putting downward pressure on home prices. Now that we've eliminated most of that inventory, we're at a point where in certain markets and in certain submarkets, builders are actually starting to raise prices again. And that's an important turn of events. In those A and B locations, there is traction, absorption is very strong, and builders are getting price increases. In those far areas that are too far from jobs and too far from services and where people want to live, the home prices are still trending downward.
I see. And how about in terms of supply, how many months of supply do we have of homes and resale homes and new homes compared to past years?
Well, the months of supply number is a little bit weird because if you look at across the country, 1/3 of the markets are back down to a low level of finished vacant new home supply when you look at the months of supply. So what that means is that they're below about a 2-month supply of finished vacant new homes. Another third of the markets are at or near equilibrium, which would be between 1.5 and 2.5 months worth of new home supply. And then there's still that last third that still have an overhang. They have more than 3 months worth of inventory. And in those markets, there's still downward pressure on home prices.
Okay, well, that's interesting. Well, let's change our discussion to developed lots. What is the existing supply of developed lots, and to put in comparison, how would that compare to past years or maybe normal markets?
Well, you've got over 1 million vacant developed lots that are sitting there waiting for a builder to come on and build upon them. But you have to think about where those lots are located, and that's where the interesting story lies. Most of the excess lots are in the far-flung suburbs that are far from jobs and entertainment and where people want to live. And there's actually a lot shortage, despite those, in the A and B locations that are close to the jobs and close to where people really want to live. I have builders calling me all the time saying, Brad, I can't find lots. And I find that fascinating because when you look at the aggregates, there's a huge oversupply. Now, it's starting to come down because starts are starting to increase. But where the shortages are occurring, you're actually seeing builders bidding up prices, bidding against each other for the same lots, bidding the prices higher and higher, and in some cases back up to nearly peak levels.
Well, that's interesting, and that should create some demand on homes and some prices. What do you see for velocity of closed homes, sold homes these days?
Well, it's interesting. Again, it comes down to the neighborhoods. If you're in one of those A and B locations where people really want to live, the prices are going up and the absorptions are very strong. I'll give you an interesting case in point. In southeast Florida, which many regard as ground zero for the overbuilding, there are at least 2 developments I know of where when they had their opening, they had people camping out overnight in order to be among the first people to buy lots and get their homes ordered. And this is before they even had any models to show, just selling off of floor plans. And those developments have each sold 100 homes or so in 3 months.
Wow.
A fantastic rate of sales. And the prices are not cheap. One of the developments is in the 3s and 4s, one starting at $500,000 going to $1.5 million. So again, in those A locations, especially if it's a location where a builder doesn't have a lot of competition, that builder has tremendous pricing power and they're meeting the demand by themselves. And so they're able to really get strong sales and strong prices.
And what's that doing to home prices across the country? When you average them around the country, are we seeing some increases in values yet?
Yeah, very slight. I mean, when you look at the average, it's kind of like the old thing about a guy that's standing there and he's got one hand in the refrigerator and one hand on the stove, and he says on average he's just right. You have some markets that are still feeling the chill and others that are hot. And so when you average it, it seems like nothing much is happening. So when you look at Case-Shiller price index, you see that it's kind of stopped falling and maybe in certain markets starting to show a little bit of an increase. But the reality is that the divergence is huge. It's the haves and the have-nots. You have locations that are showing that kind of strength that I just described for you, like that South Florida example. You have certain submarkets in Phoenix, again, another kind of poster child for the downturn, the boom and the bust. And then you have other areas that are stagnant or still seeing price declines. And they continue to see price declines all into this year and next year.
Well, it's interesting. Well, what are your clients telling you about attitudes of buyers? Or, is the attitude a little different? Somebody chilled to buying homes these days?
Yeah, buyers' attitudes are a lot more positive now than they were a year ago. And we're actually quantifying that. We have a survey that we do of home buyers and of people in the industry. And it's remarkable how many people are feeling more optimistic about the home building market, home building industry. And it comes down to the economy. It comes down to jobs, because the economy is growing and jobs are growing, although very slowly. It's still a lot better than 3 years ago when we were still losing jobs. And as long as we continue to see the economy improve, we're going to see continued improvement in the housing market. The other thing that's happened is the doubling up factor. People have doubled up. They took on roommates. You have the 30-year-olds living with mom and dad. That's a huge trend, and it has a huge bearing on what's happening today with housing demand and what's going to happen in the future. In this country, we normally create 1.3 million households a year. In the last couple of years, it's been more like 500,000 a year. So at less than half of the normal rate of household formation, we know that household formation rates are going to go back up to 1 million a year, 1.1, 1.2 million a year pretty soon, and that's going to drive housing demand back up with it. So housing starts will have to go back to 1 million or more starts a year within the next 2 years just to keep up with the demand.
So you expect to see that there's some pent-up demand then out there?
Yeah, there is. We're seeing it, and it's kind of ironic. There is excess supply, but there's also pent-up demand at the same time. And it's all about location. The excess supply is in the poor locations. The pent-up demand is in the good locations, and that's why the builders are all competing and bidding against each other for the lots in those A locations.
Right. Well, Brad Hunter, thanks for joining us today. We appreciate you calling us from New York.
All right. Thank you. Good to talk to you.
If you'd like more information from Brad or Metrostudy, visit metrostudy.com. Stay tuned. More insight headed your way. I'm Michael Bull, and this is America's Commercial Real Estate Show. We'll be right back.